everyone, and a very good evening. It's my great pleasure to introduce and welcome to all of you. MCX Investor Protection Fund presents the Indian Base Metal Market, a paradigm shift partnered by ET Now. I'm Mubina Kapasi, and along with me, I have a very prestigious panel joining in. First up, let me introduce Puneet Jagat Ranka, the Senior Vice President for CPC Revenue with JSW. I have with me also Vijay Parikh, Executive Director of Gravita India, Viral Shah, Principal for Commodities and Currencies with IIFL Wealth, Chitranjan Rege, the Head for Metals with MCX, and Kunal Shah, Head of Commodities Research with Nirmal Bhatt. We've been through an unprecedented health crisis, a pandemic which has sort of reverberated through the entire ecosystem, global ecosystem. It's not spared anything or anyone. And just like the equity markets had been backed out of shape and hammered, thus was the case even with the commodity markets. But again, just like the equity markets, the commodity markets as well have, posted this resplendent recovery. First, of course, led by, underlying improvement in fundamentals, and then, of course, by pricing. So are we on this path to recovery that we are on? Is it something that's sustainably going to take us forward, or could there be another wave or a third wave, and that may in turn again hamper this path to recovery? And what's the future of the base metals segment? So that's the topic we're going to be discussing today. So gentlemen, once again, let me welcome all of you and thank you for joining in. So Puneet, let's start off with you, and on ground, you can tell us exactly what's going on currently, what things were, during the peak of the crisis, which was roughly in March and April, and the sort of swift recovery as well that we witnessed. First, of course, led by pricing. Again, the hero over there was China. Demand as well in India has come back in a very resplendent manner. So on ground, what's, the commentary you're hearing? What are your clients telling you? Are we back for good when it comes to metal demand?
What we have experienced in steel, almost in the month of October, we are back to the pre-COVID demand level of 9 million ton in India. And in fact, it is only looking up with a good recovery in the automobile sector. And most of the metal, what we see is going into the transportation, going into the electrical segment, going into the construction and infra. So all this with the government stimulus and also the government commitment towards the Indian infra is picking up very well. The government is spending, or whatever they have announced in terms of a Bharat Mala, in terms of a Sagar Mala, in terms of a housing for all, in terms of a freight corridor. So metal demand is looking very good now. The good part, the good learning here, the primary metal, in terms of steel or in terms of aluminium, in terms of copper, because scrap also disappeared in the marketplace, that has added to the boom in terms of a demand for the primary metal. So this was a good learning, and rather the producers have been regretting if they would have been in a position to retain the metal back in India instead of exporting in the first quarter and the second quarter, India would have been better off. So the same metal could have been stayed in the warehouse, like the MCX warehouse, and then getting consumed now when the demand is coming back instead of going all the way outside India. So that was the opportunity which people lost. They made some commitment also in terms of export for December quarter or even for the March quarter. So those are the opportunity lost. So in terms of the demand, we are quite optimistic, and it is looking quite sustainable in terms of a consolidation, whatever is happening in the industry, and people are able to sustain the productions.
So clearly, Puneet, I think you believe that the Indian market is definitely more lucrative, than the overseas markets, I suppose, especially for the sale of metals, regretting on the opportunity that perhaps all of those exports have eaten up of sorts back home in India. Vijay, your business of Gravita India is around scrap, around lead. What do you think were some of the gaps that the COVID crisis, and of course it was a very unique one because it sort of threw open all the deficiencies in global supply chains. So back home in India especially, do you think that the crisis really exacerbated the problems in the supply chain for base metals in India?
In fact, if we see the base metals trend from January onwards, base metals were struggling not because of the pandemic. Pandemic came largely in India in month of March, but since January onward, there was a big tussle between China and US market. And it was making the entire base metal market as a very highly volatile market. In month of March, when pandemic hit to the Indian market, in fact, initially the manufacturers like Gravita, we were also for timing were in standstill position. Initially, we could not understood what is going to be happening in times to come. In contrary to primary metal market, we are totally different. We are in metal recycling business. Our total business depends on the collection of the scrap. And since we are collecting from not only from India, but to the from Europe, but from Middle East, from US market, and every corner of these markets were struggling because of this pandemic. But yes, we came out well because some of the material was in pipeline in vessels, and some of the material we were having in the plants, and our metal like lead metal we are supplying to the battery industry, largely to the battery industry, and battery is becoming the essential products because each and every ventilator was supported by the battery, so it was coming to the part of the essential goods. This pandemic will change the life of the people those who are traveling into the mass transportation. They will go back to the uses of whether it's a two wheelers, whether it's a small cars, and this kind of consumptions or the kind of liftings from the auto sector are the visible to that. Auto sector demand has increased.
Yes.
So our requirements, our productions, our demand is totally depend on the auto sector, and we got the very good support from this sector.
All right. Well, we know in a couple of days whether that trend has continued in the month of November as well in terms of auto sales. Kunal, what Puneet and Vijay have both spoken about is with respect to the fact that, yes, during, of course, the lockdown, businesses, production was shut, but demand came swinging back. And when Indian demand did come back, they actually faced trouble catering to that demand back home because the inventory is well aligned with them. They try to push it out of Indian markets for obvious reasons, to sort of cut down the glut that may have accumulated. So, Kunal, do you think that we are at a juncture where, we are perhaps facing lower inventories in base metals to the point that we may not be able to cater to all of the demand that we're expecting will come in?
First of all, regarding the Indian base metal market and the global base metal market. Global base metal market, there has been a lot of developments, mainly on the supply side. We have seen mainly all the supplies, mainly in South America, in Indonesia. We are seeing constant supply concerns. In South America, cumulatively, including all the major mining activities, total 405 mines were shut, major mines of steel, of copper, of nickel. So this is the kind of silver, zinc. So we have faced, because of the COVID crisis, a major shortages developing across the world. And in the same time, we are also facing a huge tap of liquidity which is opened by the global central bankers. So it is every time there is a monetary debasement taking place across the world historically, at that time prices of metals tends to move up because the currency tends to lose the value.
Yes.
But this time was different. This time we have seen copper, all the base metals have given more than 100% return in a matter of 6 months. So if you look at the overall share of India's base metal demand, so for example in copper, so 1.5 million ton, 2 million ton, this can easily double in a matter of 3 to 4 years. The way India is going to grow in next 3 to 4 years, the demand is going to be increasing in a leaps and bound, in an exponential way. But the supply side domestically continue to remain weak. So I agree to the point which you said. The supply side domestic, from the domestic point of view, continues to remain weak with the increasing prospects of demand from India. So right now India is facing shortage in case of many metals, and the way India is going to grow in next 3 to 4 years, I think it is definitely going to be something, where the policymakers will be wondering how to increase the production in domestic market. And here comes the role of exchange, which is started the physical market of metals in base metal complex, I think it will play a major role going forward.
Viral, let's talk about those delivery-based contracts that have been introduced since about a year or year and a half. How has it sort of changed things, for those individuals, for participants in the commodity market, in commodity exchange? How do you think it's changed things, Viral?
Just to give you a perspective, metal contracts on MCX have been there since 2004-5 when the exchanges started. And for a better part of 15 years, we never had a delivery-based contract. So, everyone who used to participate, either it was the LME pricing, which is, you trade on the LME markets, or you trade on MCX, which is a rupee derivative contract of the LME pricing. But the evolution happened when SEBI and MCX, and kudos for the regulator for that as well, to try and experiment with the delivery-based processes for the 5 primary base metals, which is aluminum, zinc, copper, nickel, and lead. In fact, IFA Wealth has been at the forefront of this change. We were one of the first service providers to facilitate delivery in 3 of these 5 primary base metals. And to cut a long story short, over the last 18 odd months, we have seen a phenomenal growth. On an average, you are seeing close to about 30 to 40 million dollars worth of physical commodities getting exchanged through the exchange ecosystem of MCX. We are seeing participation in all the 5 base metals. We are seeing imported material getting deposited. We are seeing consumers signing up and wanting to take delivery out of the exchange ecosystem. And a big credit to that is also how the entire delivery based has evolved. If India's consumption of base metals has to increase, you will need to have a very strong role of the exchange ecosystem in terms of satisfying both the producers as well as the consumers.
We've been talking about recovery. Viral's been talking about, what corporate India has done. How are you seeing this sort of reflect in terms of participation on MCX, the commodity exchange? The fact that, we're expecting the economy to grow leaps and bounds. One way to ride that, that wave is doing so with commodities and base metals.
The entire idea was to convert the contract in such a fashion that the physical market easily absorbs what has been presented, and our conventional, the participation base finds relevance to what they were very used to. So while we were doing all of this, and cut that and enter into say 2020, frankly at exchange we never realized why the inventories were piling up and all of this. But what my sense on ground later on, when the timings were curtailed, in the month of from last week of March to say 3rd week of April, we realized that there is enough amount of inventory in pipeline which was going to hit the Indian shores. I mean, you couldn't have stopped ships wherever they were. I mean, lockdown was here, but lockdown was not on the high seas. So what we observed was that this inventory actually came to the shores and seamlessly found its way into the warehouses, because that is how the delivery of last resort, actually the role was very appropriately it got displayed. So our idea is that we should continue to be excellent supplementary physical demand supply delivery based model, and primary role continues to be the the price discovery for whether somebody wants to hedge, whether somebody wants to get delivery, whether you are actually dealing into the product which is deliverable on exchange or not. Anything which is referenceable, it should become a right product, so to say, for them to use this thing for a insurance and hedging purpose.
Speaking of warehousing, of inventory management, Puneet, I think when it comes to commodities, globally, the one leader really is China. It's often used as a benchmark. When China makes an action or makes a move or even releases their frequent macroeconomic indicators, it gives us a sense of how we could see the commodity markets move. What do you think the Indian markets have to learn from China's commodity and base metal markets?
China has been a great learning for all of us. In fact, what India is missing today is a proper integration to the global economy. It is a small step what MCX has taken, but maybe they will have to take a larger step in terms of taking an advantage of the India being the third largest GDP in terms of purchasing power parity. So we are a great demand country, and we should facilitate, we should follow China in terms of practices what they have adopted to support the producer and consumer of India to contribute in the economy and export more and more rupee and strengthen the economy.
Vijay, how do you think, especially MSMEs can really cope with the inherent volatile nature of metals? Metal prices, of course, change on a day-to-day basis. What I want to understand from you is the role of hedging and how MCX provides that hedging tool for especially MSMEs who work in the metal industry.
MSME is getting a complete support from the MCX, whether they are getting the contracts of 5-ton metal of this metal contract or related metal contract, or might be they may be getting 100 tons of the metal. They can go to the MCX and they can hedge themselves on back-to-back basis. That means when they are concluding the contract with big companies like Larsen & Toubro or Tata Motors or any kind of these companies, they can hedge themselves on back-to-back basis. And MCX is the complete suitable platform for them to hedge their profits, so that it is giving the liquidity to them, it is giving insurance to them, and now the way government of India is pumping money to the MSME, it is going to be the next boom in India, where MSME companies are going to come up very fast. And no doubt, MCX is going to play a very vital role into the entire operation.
Kunal, you've seen the commodity market really in depth in the last couple of years, with your vast experience. How have the commodity markets, the metal market changed? How were things prior to the whole delivery-based contract, which has just been introduced 18 months ago?
Indian producers, the Indian eco chain of metal market, they are basically getting aligned and getting into the exchange. So in last 10 days of the expiry, you see the price discovery taking place as per the fundamental prevailing in the domestic market. So earlier it was the mirror of what was happening in the international market. So if I am in India, for example, the premium of copper have shot up, but globally the copper prices are going down. In MCX earlier, it was not reflecting. But now, for example, if the copper premiums are surging in India during the expiry, even if the LME prices continue to stay steady, the Indian prices tends to move up. So this is what has been happening in Shanghai. And now in India also, we are moving towards a scenario where the domestic demand and supply, the domestic shortages or the surplus will obviously have the impact during the expiry tenure of the market.
Well, Chittaranjan, we'll come to you on participation and more. But before I do that, Viral, do you concur with Kunal? Do you think that's the potential of the Indian metal market, that we can on our own have a benchmark of our own? Because like Kunal mentioned, we usually look at LME or we look at SHFE. But do you think that our Indian metal market has come of age to have its own benchmark of sorts that Indian producers, Indian buyers can refer to?
Bhumika, to a certain extent, that process or change is already underway. See, what happens is in a futures contract, which normally is for a 30-day, 60-day, 90-day period, in India, obviously, we don't trade the far dated expiry so much. But in the current context itself, the delivery process happens only for 5 days in a month. For the remaining part of time, there exists now an off market, or what we call as a parallel market, where participants, on the basis of the demat stock that they have, they start quoting a price to buy and sell on the basis of the MCX prices itself. And that acceptance is on both sides, at the producer level also, as well as at a consumer level as well. And that is, as Kunal mentioned, that has already started in the physical market, where people are buying and selling on the basis of what is the MCX derived price, and charging their own premiums or discount depending upon the demand supply scenario in the market. As the road ahead, I would say is, this mini LME model can be a full-fledged LME model, because a lot of changes have been implemented by the regulators, where now even custodians who earlier were not allowed to take physical delivery of the commodities can open demat account for collective investment vehicles like mutual funds, portfolio management services, alternative investment funds, as well as for large corporates as well who want to participate and take huge positions on the market itself. And as Rege mentioned, this exchange has to be looked at the perspective of both. Deliveries is obviously only in case if clients want to give or take the physical delivery part of it. But the key role for price risk management is getting stronger and stronger, because no longer is it detached from the physical market, but it is working towards getting into the physical part of it. So the risk management activities are performing well. People have started trading also in the options contract, which is a very, very potent tool for price risk management. And even the spread contracts, where clients take a view on the calendar spreads, whether the market is into backwardation, contango. These are some of the things which are very essential from a metals perspective.
All right. Well, Chitranjan, I'm going to take two questions and I'm going to fold them into one. Firstly, how has participation in the MCX market, in the commodity market, increased in these last perhaps couple of months, couple of years? And secondly, do you envisage a future where you have investors really wholeheartedly participate and make use of the platform that the MCX has provided? What's the objective from here on?
So the idea is to reach out and educate each and every participant to say that you have control on your margins, and to focus on the margins and profitability. Rest everything you should leave it on the exchanges. So, but I think this is a baby step process, which is what we are trying to do. So, as Veeral rightly mentioned, increase in the additional number of products and all of that is definitely in pipeline. But what we also are trying hard. I'm trying to address the question of how the participation is unfolding. So the conventional participants continue to be party to the price discovery which is happening now. The physical market has got incrementally connected to it. We are now trying to bring in the other value chain participants who may or may not be actually consuming or delivering the product which is getting delivered on MCX, but have a price referencing connection to it. So that is what we are trying to do to our best. But there is lots more to be done, and I'm sure we are geared up for that.
Okay, well, all right, gentlemen. On that note, I think we're completely out of time. So once again, Puneet, Veeral, Vijay, Kunal, and Chitranjan, many thanks for joining us today on this webinar, and thanks to all of our participants as well for tuning in today on the webinar.